builds higher off of that. That would be my guess. Interesting. Dollar index popped on the PMI news, but again, a little bit messy here this morning because you're getting the PMI data that came out mixed with some potential strikes in Beirut. It's been a couple hours. That was earlier. Okay. Breaking Biden, we are discussing Israel striking Iran oil facilities. Yeah. Potential supply risk on oil. That's exactly what that is. Oil prices did shoot up momentarily here. They're still up 3% on the day. Very interesting. Big move there. Nasdaq is all over the place this morning, guys. We jumped. Actually, we dropped. We flew. We dropped again. Very, very volatile. Anyways, guys, to bring in more heavy duty help on this topic, we're going to bring in Chris Pulver here in just a second. Just a reminder, we are doing an Edge Finder giveaway this week. One free copy of the Edge Finder is going to someone in the audience. If you would like to enter the Edge Finder giveaway for a chance to win, we will drop the link. It is free to join. The link is in the chat in just a moment here. So while you fill that out, we're going to roll a quick break. And then Chris Pulver's joining the show, getting in on some of the action.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right, we're back with Chris. Chris, I'm behind this thing. I'm coming.
I see that.
Hey,
what's up, dude?
What's
How are
up?
you?
Pretty good, pretty good. Bit of a confusing last couple minutes. It does seem like there was some news or some retaliatory stuff with the Middle East.
Sure.
And at the same time, we had services PMI. I want to do the services PMI first, really quick. Numbers came out really good.
Yep.
That was 54.9 compared to a forecasted 51.7. Expectations for a bit of an upbeat outlook for the services component of the U.S. economy, which of course is the big one. So that was a really strong figure this week for the dollar. Dollar is up off of that, and also stocks popped initially off of that. But then the confusing part is that we now also see some geopolitical tensions that took place at the same, last 10, 15 minutes.
Sure. I think one word sums it up: noise. We have non-farm payroll tomorrow, so I think it's noise today. Non-farm payroll tomorrow. Also, let me ask you this, Nick. If we have a really rockin' non-farm payroll tomorrow, do you think that changes anything with the outlook of the Fed as far as their aggressive rate cuts? I mean, November's looking at 25 basis points. December's forecasted for 50 basis points. Does that change to zero? Does that change to a pause at all by the end of the year? Or I think the market might be facing some expectations going into 2025 that the Fed may not just continue to cut all year next year. Thoughts on that?
Well, I was discussing it a little bit earlier on so I actually think that I'm reverting a little bit back to where I've been for the last few years, which is I want to stay long companies that grow irregardless of rate cuts, because I think that I agree. I actually think that there's going to be probably a sobering event where people realize okay, yes, we're going to keep the direction is still rate cuts, but you're not going to get fast rate cuts. Now, what does that mean? Well, that means that, companies that are very reliant on quick rate cuts, for example, utilities, real estate, maybe technology as well, those could do okay, but then maybe other areas do a little bit better. I really still I think I am partial to the big ones, right? The Mag 7 names. I'm interested in staying long that. I think that, if you do see the economy stabilize, maybe energy is a play that could be interesting. So you got all sorts of different potential directions it could go. But in my view, the path of least resistance is the economy seems to be holding up. Rate cuts are in my view a little overestimated for how fast they're going to come in.
Mm-hmm.
And that leans me more towards I want to stay long, like really high quality, high growth stuff, and stay away from the higher risk stuff that could really get beaten up if we see rate cut hopes get slashed a little bit.
Yeah, I think what I'm hearing you say is you don't like the Russell 2000.
Well, I want to be long the Russell, I really
I know.
do,
Yeah.
but you kind of need the perfect storm for
It's
those
not the
two
quality.
things.
It's not quality. Like I think
Yeah,
that what you're talking about is you're going to see like a flight to quality. Um, and yeah, I mean, I'm looking at like I've got red in my account today because China stocks have finally faced a dose of reality with a pause
sure.
or a pullback,
Hmm.
and I'm seeing like a little red because like I've had green for like 2 straight weeks, and today is like the first day that I'm getting like a 1% pullback on just price pausing. So I mean we're still looking at HSI, like it's a long wick to the south. Alibaba gapped lower, but is what is green on the day. Baidu, big gap to the downside. I mean, that's a big shift right there. We had a close and an open about 5.5% lower. I mean, I'm okay with this thing like getting a little pullback. I just don't want to see, a violent like crazy gap fill. I'd just like to see maybe a 30 to 30% area. A bull flag would be fantastic. I think right now like China might still be on holiday. And I'm wondering if they're essentially. I listened to a really good podcast yesterday with like China expert. The guy spent a decade plus like going back and forth doing business. He was part of the whole like China hustle. Uh, it was all like in the 90s where it was like it's weird like old school China thoughts of like they call it like armchair and keyboard warriors of like all these people are specialists on China. Look, I don't claim to be a specialist on China. I just look at
Mm,
it as like it was a good trading opportunity for me that's starting to pay out. I'm just hoping that there's a little bit of follow through here because if there is, I'm looking at taking profit fairly early. I'm not looking at staying this trade for more than maybe another 30 to 60 days.
sure.
I think if China can stay relatively resilient through our U.S. election and Q4 for the U.S. and Q4 for the global economy looks fairly good, then I'm certainly pretty eager to just protect and try to get some new bumps on these highs and then protect some profit.
Yeah, I
Oh,
like that. I think
yeah.
the China play has been remarkable, but that is the kind of move that is definitely a short squeeze move,
Yeah,
to say the least. Like,
yeah,
you get a
exactly.
lot of people who are probably piled up on the short side, which is a great opportunity to your point with the contrarian. If you can call a short squeeze or you have positioning ahead of a short squeeze, it's a remarkable thing. You've done that a couple times, Chris. I've seen you do that with the yen too, right? The
Yep.
yen was the exact sort of idea too. It was like everybody was super, super bearish the yen. And when it gets a little bit too piled on one side, these types of moves eventually happen. Now, that being said, you could have been very easily, very early to China if you thought that over here or over here. But yeah, I mean, it got to a point where it's just like how low can it really go? And I mean, it can go really low, but the risk reward starts to look a little bit better. So I actually kind of agree. I'd be interested in Chinese stocks if they had a big, pullback from here, but
Sure.
I'm not betting on that because, again, it looks pretty strong for now. So we'll see where that goes from here. What are your thoughts on the dollar? The dollar's broken out this
Yep.
101.8 level here, or at least trying to. What if we get strong jobs data tomorrow and dollars just up and away?
I think it makes perfect sense technically. I mean, it was look at those all those wick lows for the last since like the 18th, since the Fed really. That has just been nothing but like chop city, bear trap, and it's not a surprise that you're getting 4 days of movement finally. I mean, you've had zero direction on the dollar outside of is that the lows, is that the lows, dollar's getting weaker. I mean, we said this many, many times. Be careful on the dollar because this looks like a bear trap's written all over it. You've had plenty of support since, early 2023, a fake out in July, the holiday pivot. We're right back to the same lows. I mean, I'd like to fade the dollar. You can see the fib on my chart. I mean, if we get to the 382 or the 50 level, let me change my color here. If we get to the 38250, I would be looking at this area as okay, dollar gets some strength. And maybe we have a rip here a pullback on non-farm, and there might be one more push into that zone before the dollar turns for, maybe a Q4.
Yeah.
So think about this. Like, we've got the election coming up, October. I found it interesting. Let me find a screenshot from yesterday. Seasonality for the last like 20 plus years. So this is an aggregate of all the S&P movement for the last 20 plus years. When we've had a decent run from March to August, September, October are usually the pullback months. Well, what was September this year? Not a pullback month. Other than that post Labor Day drop of 4 to 5%, we came up and hit all-time highs again in September, which is very, like, it's very rare for that to happen in September. So October could be the dip month, and to what degree, I don't know, maybe 2 to 3 to 5%, something like that. But that's showing that seasonality wise, we don't really make higher highs in September and October going through the rest of the year. The only time that's really happened was 2017, when the market made literally higher highs every year or every month. Every month in 2017, there was never a losing month, which is nuts.
Yeah.
And then 2018 January turned into a 20% drop. So go figure.
Yeah,
But,
and that seasonality is that was part of the reason why September was not a great trading month for me. I stepped out of the way with a lot of indices because, again, seasonality. Had you done that for several years before that, that would have been the right call. But this is the challenging and arguably the fun part about markets, is that nothing works perfectly. Nothing is 100%. But to your point about September was expected to be a bearish month, and we saw a big up month. So, it's one of those things. Nothing is a perfect indicator of what's going to happen next, but seasonality is always worth keeping an eye on. It's also an election year. It's a tricky time. You have a lot of forces out there, a lot of variables going on at the same time. If we're taking a look at, where we think markets are going to go next, well, you've got earnings season that comes around. You've also got tension in the Middle East, which is nothing new, but seems to have picked up again recently. You also have, as I mentioned, a big election that's very, very close and can cause some uncertainty there. You just have a lot of forces here. You also have the Fed's rate cuts, which again, I am ideally cheering for slow rate cuts, right? We've talked about that 100 times on the show. We want to see rate cuts, but rate cuts at a pace that is, stable, not rapid rate cuts to fend off from a potential, crash, right? So I think that we could get that. I still stay in that camp. But I think that if that's your base case of where you want to be, then, maybe, gold, silver, I'm still going to be bullish on these, but I think they're due for pullbacks. I wouldn't be, chasing these things. If you think rate cuts are coming rapidly, then yeah, the portfolio idea for me would be gold, some Russell, Dow Jones, maybe some dividend companies. Like, that would be the portfolio for me. But for me, it's more on the side of, high growth tech and, just a general kind of broad stock market positioning, and watch for dips on gold, but not chase it aggressively.
Yeah. One thing I'm looking at this week too is, are you following anything with the Schwab ETFs that are going to be splitting
No.
this next week?
Mm-mm.
So there's a couple of them that I'm interested in. So SCHD is a Schwab dividend, and then SCHG is large cap growth. So if you want to play basically the Mag 7 as an aggregate, and you can see that it looks very similar. We haven't quite hit all-time highs, but you can look at the holdings and see what the percentage makeup is. But what I like about this is, if we're $100 right now, and it's essentially like buying the top 10 S&P or the top 10 Nasdaq, that's kind of nice. Well, let's say a top 10 S&P. That's kind of nice that it's $100, and with it's going to be a 3-for-1 split or a 4-for-1 split. This is going to be like a $25 ETF. Now,
Yeah, play some options on it.
sure. So, I mean, $25 it's easier to buy 100 shares at that price, or I could buy 100 shares now and then see them split. I'll still have the same dollar allocation, but I'm going to get, 400 shares, and I
Sure.
can play some options. I can, lower my cost base a little bit. So I'm pretty interested in doing that, getting into something, and also just having, and I don't know if I'm going to do I'll probably do a collar position similar to what I do on the indexes a lot, where I sell a call above and I buy a put below, and it's free for me because I essentially finance that. But I'm obviously looking for the stock to get called away for gains, and I keep collaring. So it looks something like this. If we make higher highs, if I buy the shares here, sell a call, buy a put. Well, if the put gets me profit, then I just reestablish my position, and this helps lower my cost basis. And then I have a new break-even price, and then I sell a call and I buy a put. If price goes up and gets called away, I've lowered my cost basis. Let's use a blue line here to illustrate that. So if I go from this cost basis to this cost basis, well, I still get a gain out of this as a net result instead of just being break even. So
Hmm.
I might do this on like some of these like 3-for-1s, 4-for-1s. I did some research last night. There's like 8 or 9 of these that I'm interested in, but I'll probably stick to maybe 1 or 2 that are just pretty simple. I think the price will be right around like $25 to $30. And it's a way to kind of participate. Now, it's not going to be as like the premiums will not be as rich on these type of options as you would if you just traded the index. If I traded SPY or Qs, way better premiums on those when it comes to owning the SPY, owning the Q, and collecting a ton of income like weekly, as opposed to if I look at the option chain here for SCHG, that's your large cap growth. If
Yep.
I go to the options chain, they're monthly options. So, and even actually they're even the November to January to April, these are quarterly options.
Oh
So
wow.
that's
Yeah.
not great. But in the event of holding or dollar cost averaging,
Yeah. If you're
there's a,
doing like
there's
a
a lot
long
a lot of ways
term.
to play it. There's a lot of ways to play it.
Yeah.
Yeah.
No, I
So
like that.
just I was curious if you're following that.
I sold a ton of puts on my in my account the last few days.
Okay.
Just a bunch of cash secured stuff. Nvidia, Tesla, I already have position. I sold calls on that one. That one ended up being a decent play there. I've had puts that I've sold on Google, Exxon, Apple, Amazon, Uber, JP Morgan, and BITO. So sold puts a bunch of places, which is, you're talking about different strategies for different ways you can play stuff. This,
Yeah.
cash secured puts are sort of a lower beta way to play the market. I am actually, this is kind of the cool example. I'm up 0.1% on a down day by selling puts. I've got some specific ETFs that are carrying today, which is like SMH. Semis were up with Nvidia, so
Mhm.
Nvidia is like the one big name. I get some Nvidia positioning, so about a slightly better than flat day on a red day. I will take that, and that's for me. It's like if the market trends lower here for a little bit, I could get filled on some puts that I sold. I want to get assigned, and to me, that's ideal. I like when VIX is up a little bit. You can get some decent premium for selling stuff,
Yep.
and we'll see where it goes. Chris, I'm going to back out. I'm going to give you the stage for a little bit here. Got to get onto some stuff that I'm working on,
Okay.
and going to let you take over. Before we step out, guys, just a reminder that you can actually get access to both Chris and I's signals inside of the A1 Trading Discord. If you'd like some information about the Pulver alerts, if you're an existing member with us and you don't have access to Chris Pulver's trade alerts already, we're going to drop a link here in the chat where you can speak to one of our staff members, Drew, Emily, or Hallie. They're standing by to help you out if you would like to go ahead and get access to Chris's trades, or if you'd like to get access to my trades. We got some nice discounts available if you message in right there. So, Chris, you got it from here, man. Enjoy the show.
All right. Thanks, Nick.
See ya.
All right. Take care. I'm just checking out a couple things. So CVX, I do have some shares of CVX. I was looking at XOM. Looks like XOM is outperforming with the little rip we're seeing in oil. XOM is right back up near all-time highs. I'm just going to go to, I saw that Palantir had a nice little pop this morning. Looking at fair market value on, this is Palantir up to $51. I'm long Palantir with a bunch of options. I don't own the shares. I got rid of them after, I think I had like a 100% around Palantir back in like 2023. So when I started to see this thing bottoming out, this is late 2022. Not interested. We started breaking some structure. I looked at some falling wedges. I was in here around like the teens, and once I had structure back into the 20s, it was good enough for a nice profit. But I'm still doing options on Palantir, a bunch of really cash secured puts. I want to own shares. I also have the 36 by 35 that I want to own shares. We have earnings coming up on Palantir on November 5th. So it's out of ways. Fair market value at $51. My question is, since this has been introduced in the S&P, are we going to see like $50 Palantir prior to earnings, or maybe not? I don't know. But the 36 by 35, this trade is intended for ownership. So I've got the sell put here, the buy put here. If price goes down below this, I'm looking to own shares and then hold it back up towards highs and try to flip this for maybe, I mean, if I could take shares under $30 and get $15 to $20 a share, I'd be pretty happy with that. CVX, I was looking at this one fundamentally. Let's go CVX compared to XOM. So it checks a lot of boxes. Reliable dividend, earnings forecast to grow well below estimated value. You know, and for an energy stock, we're sitting with some pretty good price to earnings, price to sales ratios. Fair market value, you know, 267 trading at 150. So I did take a little stab at CVX. Price wise, it was just in a better spot. So I bought the shares. I didn't buy a ton. I bought like $1,000 worth. My trade price was $143, and it's up like $8 a share right now. But the nice thing is if we have additional runs in this kind of, you know, the energy sector is working well with this Middle East conflict, which I know it's not me on the humanitarian side that's wishing this is happening. Obviously, that would never be the case. But on the trader side, if you've got energy prices going up or oil prices going up, I do have some exposure on CL for crude light futures. I do have some exposure on XOM and CVX. And so I'm looking to trade this one if we get up to $175 to $180. I mean, that would be about $40 a share. I mean, that's a pretty good trade. So I do have some energy exposure there. You know, we'll go top down here. I'm going to have a hard cutoff today around 11:05 or 11:10. So if Frank comes in, we'll need to make sure we pay attention to time. I'm not sure if we have another guest coming on at 11 o'clock. But let's go top down. So S&P, couple things I'm watching. I'm trying to keep this whole notion of, you know, where we're going to go. What could we be facing here in the next 30 to 45 days as the market braces for whatever election drama we're going to get? You know, we are going to have a couple weeks of heavy earnings going into the election. I do wonder, and this is one tactic I'll be looking at when I trade options. And if you're in my alert service, the Pulver alert service, I will be trading a bunch of earnings. So if you're interested, I will go. I'm going to spread the strategies out where if we have, let's say for the first kind of week of earnings, when let's get into like stock twits here, it usually leads with financials, right? And then after financials, we get into the Mag 7s, which is obviously going to be like really important earnings is going to be your top market cap and your top holdings in these, you know, market cap weighted indexes like the S&P or the SPY and the Qs. But what I want to look for, at least out of the first week or so, is are these top and bottom estimates, so your revenue and your earnings per share, are these movements going beyond the expected move or within the expected move? Because I would imagine that the markets are more likely going to be a little bit more tense, a little bit more hesitant to have these big blowout moves for earnings. Because if they have big blowout moves for earnings, that's essentially going to front run the election. And I know the election may honestly be a non-impact event for the markets. It might just be like a holding period where not a lot of price action happens, not a lot of direction happens, and then the market's just flooding with volatility after the election, and it's all systems go for better, for worse. Tomorrow's non-farm is going to be important to get another you know, kind of notch in the employment situation. Is it good? Is it bad? That's why I posed a question to Nick earlier today. If we have the jobs data coming out really, really firm, I think it will kind of make the Fed think twice about like this crazy aggressive rate cut cycle. And then they can go back to focusing on inflation, maybe balance it. I mean, Frank's in the room. What's up, dude?
Chris?
I think about like the seesaw of what the Fed has given us. If we had, let's draw this out here, Frank. So if I have a seesaw here, and we will say that we had a big focus on, if this is where we're angled here, we had a big focus on, it was inflation was the most important thing, right? Inflation was the most important thing. And just recently, this all flipped to employment. Right? So here's employment. So what I'm wondering is, this week we had PMI services came out way better than expected. PMI manufacturing is a little bit softer. Prices were getting lower, which is probably a good thing for inflation. But employment, if we have a strong, like ADP non-farm was decent, unemployment claims was down, and then we have non-farm tomorrow. If we have another decent print in unemployment rate being lower, which was what activated the SOM rule back in July, if the unemployment rate goes down, if the average hourly earnings is steady or up, and if the job number beats, which I think the forecast is 144, if we print 175 or 200,000, I wonder if that ends up shifting this into something along these lines where then we go back to this. Then the market's more, okay, now the Fed has to pay attention to both equally, or does it shift where now inflation becomes a concern because oil prices have gone up, 8 to 10% in the last week. So it's obviously going to be a balancing act that the Fed's going to have to navigate. But I think this maybe puts a pause on the expectations that the Fed is just going to be crazy bear or crazy dovish and just cutting rates like crazy because inflation is totally under control. When the fact is, it's not. You can't see oil prices go up 10% and think that inflation is like, oh, it'll come back down. I mean, nobody knows that. There's so much disruption going on right now geopolitically that it can really mess up a lot of things. Now, core inflation may not change much, but headline inflation could be very different. So again, I just think the market's going to be sensitive to it, and it might just shift around the priorities of the Fed. That's all. Thoughts on that, sir? What do you think?
I guess it's how aggressive do they want to be?
Yeah.
Back then when inflation was the issue was because it was 10% or higher at the time.
Yep.
So that became their primary objective. And then now that it's at 2.5% and the labor market's cracking, that's why they're focusing more on the labor market. But I think, yeah, you're right. They're just going to keep going back and forth until, they have this balance. But I don't know how aggressive the Fed should be. I didn't think that there should have been a rate cut, but they did an aggressive one anyways of 50 basis points. So yeah. I think going forward, it really does depend on the data. I'm thinking that if NFP is not getting better, the rate cuts are going to have to get more aggressive. Just like, I guess, how the Fed has been behaving. I feel like that's what they're going to be doing.
So you think they want to know, do you think they want higher non-farm numbers? Do you think they want lower unemployment rate? I think the unemployment rate was probably what activated more of the dovish tone than it was just the job numbers, because even though we've had some misses in the job numbers, we've had positive prints in non-farm. It's just been slowing.
I think the things to look for, is unemployment rate. You want that to go back under 4%.
Yep.
Is what I'm thinking. But on NFP, I really think that you should just be monitoring the revisions each month. Like, don't pay attention to the actual number because it's not necessarily accurate. So we saw, 114 or 142 previous, but it was revised. It's actually revised down to, 89? Yeah.
Yeah.
So just a huge difference. Like the actual numbers are just never right. This year they've just been very inaccurate. So let's say watch the revisions. If the trend is still lower, like if it's lower than 89, I think that's a big problem, despite whatever the number is this month. And then I think unemployment rate will kind of follow along with that. So if NFP beats this, could also still be higher unemployment or unchanged. So I think watch the revisions and watch unemployment rate. I don't think wage growth or hourly earnings is necessarily something to watch too heavily because inflation, I guess right now, is just not a huge issue. But I would say those two metrics, that's going into next week. CPI obviously is important, but I think labor is the main focus now, and that's what the Fed has been focusing on. So
I agree. I want to see, is there a forecast? Let's go to next week. I don't think there's a forecast out yet for Thursday's CPI. There's not. Let me see. I'm going to check a couple other calendars here. I'm going to go to a Bloomberg calendar, see if they have anything for next week. So if I go to the 5th, let's go 7th, 8th, 9th, 10th, 11th. What? There we go. Let's look at Thursday. So that is Tuesday, Wednesday, Thursday, and this is coming out in the morning. CPI year over year. This must be the previous, I'm guessing, not forecast. Yep. So we have forecasts. Yeah, there's no forecast out. So this will probably be adjusted, edited, maybe printed on the calendar by Monday when we come into trading. The previous print was 2.5. I mentioned this week on this Trueflation reading here. Let me refresh this page. This is one thing that concerns me about the underlying inflation is that this, and I know this is not the same measurement. You're wondering how do they get a 195 versus the forecast or the actual print that we see as 2.5. But going from this low to that type of spike to the upside, I wonder if when we see the print next week, if the print we see is actually reflecting this bottom, and that's our final CPI print, and then the next one is going to be higher, but that's not going to be until November. And the market might get all excited that we print lower than 2.5. We talked about this yesterday. So I just think that's something I want to pay attention to in the background. And I'll just think about the sensitivity of if it's the seesaw of like employment versus inflation. Here's what I don't look. I think Jerome Powell is a smart guy. I think he's been a great chair. I know it's been frustrating that we all have to live and die by everything the Fed says, and it's what the market does, and don't fight the Fed. And it's frustrating that it matters so much. But I also think that Jerome Powell understands that the best thing that they can do as a power is do not let this second wave of inflation get worse. And I think the reality is the Fed is probably able to tolerate 3% inflation, but anything higher than that, we're talking about fudging with monetary policy again, probably raising rates. Like it's going to get uglier. Like you had the was it Arthur Burns? He was the Fed chair before Volcker. Volcker's the guy that came in and raised rates like crazy and kind of saved the economy, but it wasn't really the case. He just stopped inflation, but he crushed everything. I just think that if we get back above 3% headline inflation, the Fed is going to look like idiots because what did we do? We stayed resistant. We tried to drive things down. We were almost on the brink of a recession because all of a sudden we triggered the Somme rule. And do we see inflation spike back above 3% in the next 6 to 12 months?
Well, they switched narratives too. So like you're saying, the seesaw, they switch narratives from inflation to labor. So
true.
I do think
that they switch back. How does that look?
Get out of hand before they switch back again.
Yeah.
But I think
what's out of hand though? Do we have to have what makes the Fed switch back to inflation? 3%?
I think oil's now breaking above this trend line.
Yeah.
If this continues, if we see oil back up in the high 70s, I think CPI could probably come in higher than 2.5.
But it's lagging though. It's going to be lagging. You're not going to see it reflected until November. That's my point. Is like we can see this improvement in CPI, but it's going to be a month later that we see the reality. Because if we're watching oil prices go up into the mid 70s, this is going to be the CPI that you and I digest in November when it hits the headlines. But what we're seeing in real time is this is going to be a cause for higher inflation. So anyway, it's going to be, like I said, it's going to be a balancing act. I just think the Fed it'd be silly to think that they navigated the soft landing and then just like that with a little geopolitical tension and oil prices going up into the mid 70s or high 70s, all of a sudden everything the Fed has been doing is like they're just going to scramble to figure it out. And the reality is we're talking about, so much power given to this Fed, like all the Fed members, 12 people in the world that are supposed to be able to navigate everything in the economy and fix everything. It's like it's impossible, which is why we look back 20, 30 years and the Fed has constantly just reacted to breaking things. And this would be the first time that I can remember in my career that the Fed has actually not broken something and somehow orchestrated a soft landing. So again, to say that I'm skeptical, I think my concerns are justified because in the past, the Fed has always had something to react to. And the last time they reacted was not that long ago, 2023, when we had some bank failures. Silicon Valley Bank was a big one. First Republic Bank was a big one. There's 3 or 4 regional bank failures, and the Fed immediately backstopped it along with other major other major investment banks. And that's because their tools are available, but it takes tools like that to backstop and, kind of keep things contained. So anyway, if something breaks, it's not a surprise because it's happened for a long time. But anyway, we don't have to talk about that.
The question is when. We've been talking about this for a while, so I guess it's you're
Q1,
kind of
Q2, not now. I think if we get through the election, I don't think the market cares about anything right now other than trying to grind higher. like what would derail if we look at all the indexes right now? Is there anything that would derail? I mean, this right here, just simple moving averages. We have so much room right now, Frank, to still maintain a bull market. We could drop all the way down here to the 200, and this could still be a bull market. So we could literally have a 9 to 10% correction, and a real investor could see this as a buying opportunity, because if we end up getting back to those highs, you just bought at a huge discount. But we could fumble our way to like 8, 9, 10% corrections and scare the pants out of everybody, and then buy the dip, and all of a sudden we're up to all-time highs again. But I think what's weird is, how do we just keep going higher, higher, higher without any pullbacks? So I'm wanting a pullback. I just don't know what that's going to look like, So
Yeah.
I mean, I'm just, like we talked about yesterday, man. I'm just trying not to overtrade. I'm trying not to overhedge. I'm just picking my battles, and whatever happens, happens. But I'm still long SPY. I'm still long Qs. Dips would be great. Silver and gold, same thing. Find me some levels. I did a live session yesterday at 3 p.m. and I think four or five recommendations, like, hey, check this stock out. Check this stock out. Everyone is throwing stocks at me at all-time highs, and I'm like, I have no interest in doing anything at these all-time highs. I'm not selling these all-time highs. Like, I think PGR was one. Progressive Insurance. Like, look at this stock on the daily time frame. This thing has been just a monster since 2023. I mean, Flo's got to be getting paid pretty well on all of her commercials when this thing's up 134%. We have not had a pullback. I still think there's room for the 50, the 100, the 200. Give us something to then start to participate in. It's like, I like the stock. I'm not buying shares at $250, unless it's fractional. I'll buy fractional shares. I'll buy partial shares, or I'll buy something I'm happy with a dollar allocation. But I don't see the stock necessarily something I want to call the top on. And there was a handful of stocks yesterday. I'm like, I'm going to wait. I'll wait for a pullback. I'll wait for a dip, see if it offers us something we can trade. But anyway, that's where I'm at, man. I mean, the structure is still bullish. Path of least resistance is still bullish. We could have a 10% correction that doesn't do any damage to this bull market, other than it's going to widen out bid-ask prices. It's going to cause a lot of volatility if that were to be the case for any risk-off event that just we have an August 5th event again. But I still think the market ends up buying dips. So I think the path of least resistance is bullish, and I don't want to overcomplicate it. I'm just trying to make sure I don't get caught on the wrong side of something or blindsided by something. But I think the market's pretty complacent. What's that?
I can definitely see us beating NFP. It feels like it's more probable than a miss. So I'm not sure. Any kind of pullback, like what you're talking about, I'm not sure how big it's going to be. Like, even the tensions in the Middle East this whole week have caused somewhat of a muted reaction for a rally, but
we've gone nowhere.
Hasn't really done anything to the price. We've kind of just been hovering around. And we've had solid numbers. We had good jolts, good ADP. Unemployment rate or unemployment claims rose by a little bit, but not enough to really do anything. And then services PMI came in much higher than we thought.
Mm-hmm.
So I think the numbers are stacked in the bullish favor for stocks. It's just until I guess this conflict overseas kind of subsides, we'll probably not really move anywhere. I don't really see a huge drop. So yeah, I guess like don't overtrade. I'm still selling credit spreads. I took one today.
Yep. What'd you do? I saw you had a profit yesterday, right? You had a bull put spread on SPX.
Yep.
Nice.
I did something.
What'd you end up grabbing out of that?
Huh?
What'd you end up grabbing, like credit wise? What'd you grab on the day?
I got $1.20.
Nice.
Today I got $1.60 on. Oh, well, let me pull up the S&P.
Are you doing a bull put today or bear call today?
Bull put.
Bull put. What's your bottom?
56.95.
Oh boy, that's tight.
Yep.
Okay. I've got a gamma level, just so you know. I got a gamma level. I mean, maybe not today, but gamma level at 565 on the SPY.
It was below market open, which opened up lower to begin with. And then I waited till 10 a.m.
Okay.
And I saw that services came in very high.
Yep.
compared to forecast. So I was like, we'll take this, see where it ends up. But I think we're just going to be in a lot of consolidation. And I mean, you can see by the past hour or so, it's just been kind of all over the place. I'm
Just
still kind of
perfect chop. Yeah.
hoping that if we do get a chop, it's just, we close somewhere above its lowest point today, which would
Sure.
be nice. So that's what I'm looking for. And other than that, not much. Looking for a gold pullback.
Yep.
Hasn't come.
Hasn't happened yet. Let me go to this other chart. So SPX there. I'll keep an eye on that. Gold.
Gold stubborn, just like the market.
Yep. Yeah. We're getting a very little volatility on gold. I am gladly going to be adding GC and GLD positions if we hit a 50 period moving average. I mean, I'm up a decent amount. I just have like a third of the position on gold that I do on silver. So silver to me is my much larger trade in the portfolio because number one, it's measured. I think it's cheaper, so I kind of went in a little bit heavier on silver. I thought the technicals were better once we already made our run on gold. I mean, it's just all-time highs on gold is great, but silver just still has a good technical picture, which I really like. But I do want to add to both. So GLD, GC on gold, and then SLV, SI on silver. I'm looking for pullbacks, but gold 50 period or the 50 period moving average will be awesome. 100 period will be awesome. A 200 period, we're not crazy overextended, but I'd love to see a pullback that just offers a dip. So I'll probably go out on these, and you'll see this in the Pulver alerts, but I'll probably go out to like maybe 45 to 60 days and just do a credit spread. If I do GC, it's cash settled, so there's no assignment risk. Where GLD there would be, but I don't mind owning more shares. I just don't want to tie up a ton. But I'll probably do credit spread, and then look to see if we're getting out 45 to 60 days. Do we get to all-time highs? And then that's profit on all three. So a little bit of income could be nice. But yeah, I like both of them going higher. Bitcoin, had a nasty couple of days. We're still pulling back on Bitcoin. If somehow Bitcoin pulls back into the low 50s again, I'm still interested in that. I don't really want to see it break lower than the August 5th bottom, unless that's going to be like another fake out bear trap. I mean, this is a big fib level. The 50% zone is going to be around 45K, which also would pull back into this really nice inefficiency area. So if we came back into that area to fill it, I'd be looking for the bulls to, step back up and try to drive price higher. So, but Bitcoin is going to be a product of risk on, risk off. If we don't have higher highs in the Qs or global money supply going up, Bitcoin's probably not going anywhere. So I think we have to see the stock market accommodative. We have to see some risk on trading, and then Bitcoin will continue to have some flows. And then the next big storyline is if we break all-time highs, are we talking Bitcoin at 100K? But that remains to be seen. So there's lots of good stuff to watch. Earnings season is coming up. So in the next few weeks, Frank, I think, if you want to take part in it with me, you and I could be pretty busy on some earnings plays. I'll probably end up taking 10, 15, 20 earnings trades. But like I said earlier, I don't know if you heard this, I do want to kind of get a gauge for like the financials when they come out. Are they blowing out expected moves, or are they really tight? Because earnings season through October, before we get into the election, if things are really tight, it might be a nice spot to be selling premium in these earning plays as opposed to buying. So like we did with Micron, which was 1 day late, by the way, because Monday, Micron is back below 106 and actually would have been a full profit, but I timed it wrong, obviously. Where's Micron right now? 101. You mother effer. I needed it to be below 106. I mean, it's just not a surprise. We just had that blowout move, but it faded right back to where it should have been. So fudge, man. I should have went to a 10-4 expiration, but I didn't. That's my fault. So anyway, it is what it is. It would have been a perfect trade for, this week to collect that $6.50 because it's right back where it started. So that's the type of trade I'm looking for. Is maybe that is, you basically you sell the middle, and then you buy the expected move, and it's mostly credit. If we can collect, let's say, like 60% of the width. So for if I go a dollar wide or whatever, then I'm collecting 60 cents on the dollar. So we have more reward than risk on all these trades, but that's probably going to be a pretty easy strategy to work with if I see a lot of these moves are within the expected levels.
I think one thing we could look at for tomorrow is playing NFP.
Uh-huh.
And the question I was going to ask you is, do you want to look at volatility or do you want to look at selling it? As in, if we get a beat or miss, do we think it's going to move that much in either direction? And if so, should we look at a trade that way?
Well, I'm already short on the SPY right now. I have a long put at 566 and 565 that I'm looking to take that out to tomorrow's expiration. So I'm hoping that we have a little bit more of a lean to the downside. Volatility is up. I mean, to me, I feel like I'd be late if I'm trying to get long volatility. I feel like I wasn't in love with this level at long volatility. So I don't know. I'm just going to call it out. I'm looking at 565 to be a price that the SPY can hit by today or tomorrow. If that's the case, then my SPY trade works out just fine. But volatility wise, like I only want to sell volatility if it's greater than 30, then I'll look to sell it. But if it's just going to oscillate here a little bit longer, I don't know what that looks like from price action. I mean, we could see. I mean, look, this was a correction through Labor Day, and we hit all-time highs by the time that it retreated. So it doesn't mean that we're getting this big scare in price. I mean, we're talking about a 1.5% move from the recent all-time highs. The SPX has been down hardly at all. I mean, from literally last week's high to today, or let's say this week's low even, I mean, the market's only retreated about 1.6%. So I don't know if you're asking volatility as a play. I mean, what do you want to do? You want to trade something like a vol play for the S&P tomorrow? I think it's going to be pretty tight, dude. I think it's going to be pretty tight. So tomorrow's move, you're also going to be overpaying for premiums here. So if you did like a SPY trade, let me take a look at the SPY for Friday. So the expected move by tomorrow, including today, let me go to the SPY here. So tomorrow, I'm looking at about a $6 move between today and tomorrow. So that brings us down to lows around 560 or potential highs around 572. You can see I already have some trades sprinkled in. So I have some broken wing butterflies that haven't been filled yet. I was trying to get those filled at 70 cents. I put those in the Pulver alerts. These have not filled yet, and the expiration is tomorrow. So these are likely not going to be filled. But then I put in a 566 and a 565, which right now they're both in profit. And I'm looking to see if they will go a little bit lower towards my 565 strike. I've got the credit already set at 325 and 320. So I just did that calculation based on the underlying asset times the delta to give me the expected credit. So if we can hit 565 today, that's good. Right now I'm up about $70 and about $70 to $80 on each one. So I could take the profit, but I don't know. I'm gonna see if we lean towards that 565 strike today, late in the day. Would be nice.
Okay.
But what do you think gonna play in? What do you want to play?
May look at a short play as well.
Okay.
But I don't know if I should do VIX or S&P puts.
I personally don't like the VIX. If you want to go long vol, I don't like the VIX. If you're just looking to play something like movement wise, I think NFP is enough to spur some order flows. I mean, we've had a quiet week, man. So I mean, this for the week has been extremely choppy with Monday being the end of the month and quarter. So that was a really weird finish to the day. And then Tuesday came out swinging with the big directional move. That's been really it. Like a little late drama Monday, early drama Tuesday, and then Wednesday, Thursday so far have been pretty muted. So I mean, it could be a very choppy non-farm payroll where we don't really do much. But if we do break, and this is what I think is critical here, if we break this low, it does open up some space to maybe come back into the FOMC low around 56.20 or so. So I do think there's space. As far as the expected move, I mean, we should be looking at the SPY going like maybe $10 or $11. Let me see if I can get the ATR for the day. Let's go ATR for the week. So ATR for the week on the SPX is 159 points. Let's go SPY right now. So the 14 period weekly, we're looking at about a $16 move from top to bottom. We have not done that for several weeks now. I'm pretty sure. What's this low to high? That was a $12.95 move, which was still under the expected weekly range. This was a $7 move, almost half. And then we have this week, which is still pretty lackluster at $9. So we haven't delivered on like a full expected weekly trading range for 3 weeks now. The last time we did was that crazy CPI maneuver that we had on Wednesday. So we haven't had weekly trading range hit for 3 weeks. So non-farm could open it up a little bit to possibly bring in this pushback down to the NFP, or I'm sorry, the FOMC gap. But we'd have to break the lows. We'd have to break yesterday's lows. We'd have to break, this low here, and then all of a sudden your gap is sitting out here around 562. So it's not that far away. I mean, we can certainly make a $4 to $5 move by tomorrow. Price today seems to be very indecisive. I mean, this chart is ridiculous. Super, super choppy today.
So would you take out an out of the money put, or are you just looking to straight up short it on like an in the money put for tomorrow?
No, I did an out of the money. I did a 566 and a 565. So I'm just looking for price to get there, and then that will turn my I paid $2.24 for my first debit at the 565, and I paid $1.75 for the second one. So I mean, right now they're probably break even now. I mean, it's pretty sensitive, but first one's in profit by about 40 cents. Second one's in profit by about 50 cents. And I'm just going to let them marinate for the day and see if I can find the strike level. My gamma level is lighting up. It's another like 100 net points higher. So I'm just going to look to see if maybe today is just this slow grind down to that strike. And if it holds, like, I'm hopefully out with profit, and then non-farm can do whatever it wants. If it breaks and goes lower, so be it. If it bounces and goes higher, so be it. But if I can get out at that strike price, I will probably look to protect that if price gets hit. So That's where I'm at for tomorrow's SPY trade.
Well,
but Chop City, dude, really choppy.
Figuring out the reaction is going to be hard, because I know the market wants more cuts, but do they want to see worse jobs data? So
Probably.
If jobs data comes in bad, then everyone's going to expect more aggressive interest rate cuts. Is that going to lift the market?
I don't know. I don't know. I really think we're on like very thin ice right now for this, like this Fed getting a soft landing is truly threading the needle, in my opinion. Because I mean, again, and I don't think that the consensus of like we're going to have a recession, if everybody thinks that, I don't think it happens, or I think it happens later than people expect, because it's been discussed for 2 years now. Everyone thought 2020 it was a recession, but we obviously bazookaed our way through it and stimulated our way through it. 2022 was a recession, but it was like a rolling recession where the numbers didn't add up and the historical way to measure recessions didn't add up, and everything was different sectors getting hit at different times. This is different, I guess, where it's just like maybe not everything hits at the same time. So, but the employment situation, this is why non-farm tomorrow is going to be important, because if the market sees good job numbers, it's like, okay, we steadied. But I don't think the market wants to see the Fed is going to get less dovish. I think the market wants to see like just crazy amounts of cut forever for the next 12 to 16 months. And, inflation be damned. Or we're not worried about inflation right now, which I think is silly. I think the market to not be worried about inflation it's so easy for inflation to have a second wave, and it's always happened. It's always happened. So I don't think people understand that is you don't want a second wave of inflation, because it gets worse. And the third wave of inflation gets even worse. So I think that the Fed is aware of that. I think Powell is, very, very knowledgeable when it comes to the past cycles. But man, the Fed cannot be crazy dovish in the wake of what could be like very sticky inflation. So I think the Fed is truly willing to operate within this like 2 to 3% space. But if we start getting 3.25%, 3.5%, 4% inflation again, I think that changes a lot. So I don't know. We'll see. I just, last time we did FOMC on September 18th, it felt like a victory lap from the inflation side of things. And I just thought that could be wrong. That could be the thing that comes back and it bites the economy again. So, and obviously people feel it. I mean, it's not like everyone's feeling better. We keep hearing about this K-shaped recovery. It's what we're in, right? And I mean, honestly, what I'm reading right now is the K-shaped recovery is this. Everyone that has money and has investments is doing just fine. Everyone that doesn't is doing very poorly. And so it's essentially wiping out the middle class. Everyone's living paycheck to paycheck. About 70% of the U.S. is living paycheck to paycheck. And then those that are top of the food chain, if they're still willing to spend, everything's fine. because they have enough spending power to carry the consumption. But everyone down here is who's mad right now, who's upset, who's frustrated, who's disenfranchised, right? So that's where we're at. I mean, that is the economy. And I think it sucks and it feels terrible. So how do we fix it? I don't know. I mean, do you try to lift up the middle, or you try to improve the upper? All it's going to do is create more inequality, which we've seen. This is why people hate politics so much, because it doesn't matter who you vote for. You're going to see socialist and populist policies on both sides. One is for the poor, one's for the rich, but they both add to the fiscal deficits. They both add to the debt, and it's just one's, covering for the rich and one's covering for the poor. And there's no win-win. It's like, anyway, whatever. We don't talk politics, but it's a weird situation right now, and I think the market is going to be highly sensitive to it. And also, we've been all-time highs all year, Frank. I mean, I think it's been an impressive run. Market's up 20%. I still believe the path of least resistance is the pace right now. I wouldn't be surprised if the market shrugs a lot of things off and just finishes higher for the year, maybe higher into Q1. But going into like summer, fall of 2025, I'm definitely way more skeptical of this market continuing to go much higher without having some type of correction. So I will say this: I'd like to see, before I start to get heavier on my position sizing, I'd like to see a pullback to some type of level that offers up a chance to buy the dip. So if I'm just, and again, I know I could be wrong, where if we buy the highs, that's actually proven to be a great strategy for 20 years. But I personally don't want to buy the highs. I want to see if this is a controlled move to the downside, a controlled a controlled decline. Then I look for the bounce. And this would be like this weird capitulation, if we have some risk off event, but I still think it's a buy the dip. So until this low is taken out, or until this market breaks below the 200, to me, this has bull potential bounces on all of my major levels. So that's where I'm at, dude.
In the meantime, I guess it's going to be in the Middle East. Do we know what's happening today? Like, has there been any
there's probably been some missiles fired and probably some deaths, I would imagine. I don't know. I mean, okay, natural unemployment rate shifted, could be lower. U.S. to sell. The one thing we also haven't talked a lot of is like if the U.S. has like a failed bond auction. That hasn't happened yet, but that could rattle the markets a little bit. Japan's economy continues to expand. Inflation's on track. Okay. Anything? I guess I could just search for Israel. Did I spell that wrong? AL. Nothing? No search. Biden was asked whether he'd support Israel striking Iran's oil facilities. That was 10:53. That's 20 minutes ago. Nothing will happen today. Okay. Israel wanted a reason to strike Iran. Will Israel's attack? They'll attack the nuclear program. I mean, that's not a fun situation, dude. A lot of crazy price action. So, yeah, buckle up. Just expect some chop and volatility. But Frank, I got to run, dude. I got a meeting here at 11:15. So take it away if you want some final thoughts. Otherwise, let's try this again tomorrow and digest some non-farm payroll together.
Yeah, definitely. Let's do it. Okay.
All right, man. Well, good luck on your 5690 today. I'll be cheering for you.
Thank you.
All right. Thanks, everybody. See you soon.
See you.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.